you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. NIO's impact on the pure electric vehicle market stretches far beyond any particular milestone. There's a lot of excitement out there in the market right now, but let's not lose sight of the bigger narrative. But let's remember that sustained growth is key to NIO's long-term success. Whether they deliver 20,000 vehicles in July or not should not be the sole focus of our attention. But let's remember that sustained growth is key to NIO's long-term success. Investing wisely, in my opinion, is about understanding a company's mission, its values, and its commitment to transforming an industry for the better. And not to sound like a broken record, but NIO's impact stretches far beyond monthly numbers. It's about shaping a future that's cleaner, more efficient, and more connected. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, where we talk about business and technology. If you're new to the channel, make sure you hit that subscribe button, make sure you hit the like button, make sure you leave a comment down below, click the notification bell icon. Your engagement really does go a long way in helping out the channel. Today, we're going to be talking about all the anticipation surrounding NIO and the July delivery numbers. There's been a lot of talk regarding NIO hitting 20,000 deliveries, and we're going to get into all the facts and if that's important at all in the grand scheme of things. So the talk of the town is whether NIO achieved its coveted 20,000 vehicle deliveries in July, and I must admit it's a hot topic. Speculation is running rampant on Chinese social media, and anticipation is building with every day. But as an investor, I'm going to pause for a second and delve into the bigger picture. July has been an exceptional month for NIO, and the stock has risen tremendously. The ET5 Touring and the ES8 are ready to hit the roads, and the ES6 has garnered praise for its performance. But it's essential to remember that NIO's journey is not solely based on how much vehicles that they can deliver in the short term. It's about building a sustainable future for electric mobility. While NIO's growth is impressive, external factors can impact a company's performance. The extreme rain in China has disrupted several cities, potentially impacting performance because of logistics, obviously causing delays in deliveries. True success lies not only in how companies overcome these challenges, but how they adapt in the face of adversity. Ma Lin, NIO's senior director of communications, brought to attention an essential aspect of NIO's deliveries, and that is that there's a big difference between insurance registrations, orders, and delivery. NIO discloses audited delivery numbers on the first of the month. Insurance registrations might not align due to timing differences. Historical data reveals that NIO's monthly deliveries and insurance registrations have been pretty close. However, let's not fall into this trap of obsessing over a single month's delivery. NIO's impact on the pure electric vehicle market stretches far beyond any particular milestone. There's a lot of excitement out there in the market right now, but let's not lose sight of the bigger narrative. But let's remember that sustained growth is key to NIO's long-term success. Whether they deliver 20,000 vehicles in July or not should not be the sole focus of our attention. Investing wisely, in my opinion, is about understanding a company's mission, its values, and its commitment to transforming an industry for the better. And not to sound like a broken record, but NIO's impact stretches far beyond monthly numbers. It's about shaping a future that's cleaner, more efficient, and more connected. So as we sift through the hype, let's keep our perspective intact. And just to reiterate, my prediction was 16,500. I'll be happy if they get that. If they get 20,000, that's excellent. But 16,500 is going to show growth as well. So whether they do that, whether they do 20,000, whether they do anything in between that, I'll be happy. And I don't want the market to get overhyped on these expectations and be let down. As we conclude today's thought-provoking discussion, let's remember that growth stocks, businesses like NIO, are not built overnight. They're the result of visionary leadership, committed teams, and a dedication to making a positive impact on the world. Thank you all for joining me for today's episode. As we venture forward, let's cherish the excitement, but also keep our sights set on the horizon. Until next time, stay informed, stay inspired, and let's remember that the true value of NIO does not lie in 1 month's delivery. Today we're going to be talking about NIO's deliveries. They just announced that they delivered 20,432 vehicles for the month of July. As I said in yesterday's video, short-term deliveries aren't everything. What matters more is if they can sustain the growth and continue forward with the positive momentum. Now, my conservative prediction, and I say conservative because I didn't want to overshoot, was 16,500, and they actually beat this number by 3,932 units. So this is definitely good news for NIO. We'll definitely get more into this later, but wanted to put this video out as well really briefly. So for the month of July, NIO delivered 20,642 vehicles. This marks a significant milestone for the company as it's their first time delivering over 20,000 vehicles in a single month. That's a staggering 103.56% increase year over year and a 91.11% increase month over month. The deliveries consisted of 14,066 SUVs and 6,396 sedans. So NIO doesn't break down which models specifically did what, but there is a shining star here, and that's the ES6. The ES6 has been gaining momentum, and in July, its deliveries exceeded 10,000 vehicles delivered. So that means that the ES6 contributed to about half of NIO's deliveries for the month of July. Let's take a second to appreciate the significance of the ES6, the historical significance of the ES6 here. This model has been NIO's main seller for several years, especially even when it was on the NT 1.0 platform and they took it off the market. That's when NIO's sales kind of started to drop. So putting it back on the market, coupled with price cuts, has really shown how much of a shining star that the ES6 is. Now let's take a look at the bigger picture of the Chinese electric vehicle market in July. NIO wasn't the only company with an impressive showing. Other electric vehicle makers did pretty well for the month of July as well, indicating that the industry is gaining some steam here. XPeng delivered 11,008 vehicles, which is almost half of what NIO did, so there's definitely somewhat of a sales problem there. Even so, it marks a 27.7% increase month over month for the company. The G6, which is one of XPeng's key models, contributed to 3,900 units delivered for the month of July. Meanwhile, Li Auto had an exceptional month, delivering 34,134 units in July. This marks the second time in a row that they were able to deliver over 30,000 vehicles in a single month. Deutsche Bank analyst Edison Yu noted that NIO's sales efficiency has increased, and NIO has also been able to gain a lot of demand with the ES6 being back on the market and price cuts as well, and they foresee that momentum carrying on into Q3, allowing NIO to continue to increase in its sales and delivery efforts. For XPeng, a lot of analysts were slightly positively surprised with their deliveries, and they do see them being able to deliver 15,000 vehicles next month, or if not next month, in September. On the other hand, Li Auto's performance has remained pretty solid, obviously leading the race of newcomers. However, they do foresee competition gaining steam and catching up to them, making a more competitive landscape for the company. And there you have it, folks. That's the state of the Chinese electric vehicle market in July, and a little word about NIO's impressive deliveries here, which definitely shocked the market, shocked expectations. Chinese electric vehicle market has been heating up, and we'll continue to discuss it on this channel. Okay, so I actually made a video about this maybe 2 or 3 weeks ago, saying that NIO isn't really backtracking on their word, saying that they would never create a single motor car, because this is actually for their sub-brand Alps. So under the NIO brand, it has not been announced that they'll create a single motor car. And so their reasoning for not wanting to create a single motor car was for redundancy reasons, safety. President Qin Li Hong likened it to that of an airplane, saying that an airplane has 2 motors because if one of them fails, there's another motor for redundancy or safety. They also mentioned that NIO is a premium brand, and premium brands should have 2 motors and it's okay for brands that are not premium brands to have a single motor. So by that statement alone, I don't think that they're backtracking on their word, as a lot of these blogs are saying right now. So I think one of the reasons that all these headlines are saying NIO is backtracking on their word is because NIO had mentioned that, with them being a premium brand, they weren't going to participate in the price war that Tesla spurred with the Model Y. And then they turned around and ended up doing price cuts in the end. And so a lot of people were looking at it like NIO said one thing, now they're doing another. And I definitely agree with that. NIO had backtracked on their statements there. And I forget who made this quote, but the quote was, "In business, one of the smartest things that you can do is change your mind." As a growing company, NIO has to be pretty agile. And so with the company facing declining sales and a lot of financial pressures, that was something that needed to be done. And because it was done, we're actually seeing the benefits right now with increased deliveries and them catching up to Li Auto, who's leading the pack of three, being Li Auto, XPeng, and NIO, with XPeng being dead last, NIO being right in the middle. But I think that having a single motor version of the Alps brand makes a lot of sense, because it's going to be a lot cheaper to manufacture, which means more margin for NIO, less costly to produce, but it also means that it's going to be less costly to sell as well. And so the Alps brand could really help NIO reach scale a lot faster. The article points out that Alps is sitting in a segment that's already crowded with tons of competitors like Tesla and XPeng, and most of these EV companies are actually making these cheaper cars as well. So NIO is coming into a market that's pretty saturated. For them to try to win in this segment, they have to price themselves competitively with the rest of the market. For them to not be equal or more aggressive when it comes to pricing is kind of shooting themselves in the foot. One of the articles that I read suggests that NIO might even think about exploring partnerships with companies like the likes of Mercedes-Benz to gain access to their manufacturing and distribution networks, which I don't think would be a bad thing at all. Mercedes-Benz has a well-established customer base and dealership network globally, so this could help to increase NIO's potential reach and the sales of their vehicles. And to get back to really the focus point of this video is why NIO is not backtracking on their word, is for several key reasons. Number one is because Alps is an independent sub-brand. Alps is going to operate independently and have their own unique strategies and target market. This means that the introduction of a single motor vehicle doesn't contradict NIO's promise a few years ago. Number two is different market segments. NIO's brand may continue to focus on the dual motor strategy, considered a premium feature, while Alps is going to be targeting a more cost-sensitive market segment. By offering single motor vehicles under the Alps brand, NIO is diversifying its product portfolio, catering to different customer preferences and price points. Number three is evolving market conditions. As mentioned, NIO faced declining sales and financial pressure, which led to the strategic decision to reduce prices and make strategic adjustments. Market conditions are constantly evolving, and companies have to change their strategies and adapt accordingly. Introducing a single motor vehicle under the Alps brand is a prime example of NIO trying to stay competitive, and they shouldn't be shunned for that. Number four is flexibility in brand strategy. Companies often have the flexibility to adjust their brand strategies based on market feedback and internal evaluation. While NIO emphasized dual motors for safety and performance, the introduction of a single motor vehicle under the Alps brand shows that they are open to evaluating different approaches to meet the market's demand. So kind of to conclude here, the decision to introduce a single motor vehicle under the Alps brand doesn't necessarily contradict NIO's original statement of never releasing a single motor car under the NIO brand. Alps operates independently of NIO, and NIO's main brand still may maintain the dual motor feature per every vehicle. The move reflects NIO's adaptability to different market conditions and its effort to cater to diverse customer needs in different market segments. I want to know what you guys think about this. Did NIO backtrack on their word? But more importantly, do you think that they're making the wrong decision here? What's going on, everyone? This video was actually recorded in 2020, where YouTube was actually reportedly blocking your reach if you didn't. So if you hear me referring to China as a C country in this video, that's why. Nesh Iyer, who is the managing director of NIO US and the CIO of NIO Global, attended the Next Mobility Online Summit to speak about NIO Power. Ganesh has a decent amount of credibility in the EV industry, considering that he used to be the VP of IT at Tesla and the CIO, reporting directly to Elon Musk himself. On this channel, I've been saying that the reason that people don't buy an electric vehicle right now is because of battery-related concerns. In his presentation, Ganesh pretty much confirmed that electric vehicle makers have to work hard to create a solution to this problem if they are going to steal market share away from legacy automakers. Ganesh and the team at NIO understand this very well, and they're pretty much attacking the problem on all fronts. In his presentation, he compares NIO to his former company Tesla in terms of their charging solutions. The biggest part of NIO Power, in my opinion, is their battery swapping business. A lot of people say that supercharging makes battery swapping inferior, but I disagree with that. I actually did a video on supercharging versus battery swapping, which I encourage you to take a look at. Here's the thing though, over time, battery swapping will become obsolete, but we're not near that point yet. And NIO does have supercharging. Battery swapping is the preferred method for NIO customers over there in the C country. With over 45,000 customers, NIO has completed over 500,000 battery swaps already. When the time comes that battery swapping does actually become obsolete because batteries have more capacity, NIO will be able to make a smooth transition over to their supercharging network and have all their customers be able to use that. Not to mention that a lot of customers are already using their supercharging network across China already, and they're continuing to expand that infrastructure. NIO also has power mobile vehicles which come out to customers to help them charge their vehicles if they request it on the NIO app. All in all, NIO is doing the most out of any electric vehicle maker when it comes to reducing the biggest pain point associated with getting into an electric vehicle today. They have patented technology that they also plan on leasing out to other electric vehicle makers, which will be a huge driver of revenue for them in the future if it's executed properly. So that was it for this video. Those were my takeaways from what Ganesh had to say at the summit. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, where we talk about business and technology. Today, we're going to be talking about NIO's move to potentially ban third-party customers from using their charging network. So this is going to be a pretty interesting video. Make sure you hit the like button, make sure you hit the subscribe button, leave a comment down below, click the notification bell icon. Your engagement really does go a long way in helping small guys like me continue to put out episodes every day, consistently Monday through Friday. Let's get to 100 episodes here. Now, before we delve into the details, let's discuss a recent incident at Salimu Lake. It was a stark reminder of the challenges NIO faces with its charging infrastructure. A NIO user was unable to access NIO's charging infrastructure due to it being occupied by third-party competitors such as BYD and Li Auto, who makes plug-in hybrid electric vehicles. This raises an essential question: how can NIO strike a good balance of customer satisfaction while also continuing to build an open charging network? The situation here highlights the complex dynamics of the electric vehicle industry. On one hand, NIO's commitment to an open charging network is commendable as it fosters collaboration amongst EV manufacturers, and it accelerates the transition to sustainable mobility. However, when faced with a limited number of charging piles, catering to their own customers is important for customer satisfaction and brand loyalty as well. Imagine you're a NIO customer and you're ready to go on a scenic journey, excited about exploring beautiful landscapes. But upon arriving at the charging stations, you find that there's nothing there for you because everything's occupied by competitors. That's frustrating, right? NIO's potential move to mull a ban on competitors using their chargers is an attempt to solve this problem. They're trying to ensure that their customers get the premium experience that they deserve. Now, some may argue that if NIO does this, if NIO bans third-party companies from using their charging network, it goes against the spirit of openness and collaboration that the EV industry needs to kind of spring forward here. But let's consider this from another perspective. By prioritizing their own customers, NIO's effectively nurturing a community of EV enthusiasts. This community in turn becomes a driving force for positive change and contributes to the overall growth of the electric vehicle market. In China, NIO has the second most charging infrastructure, only that after Tesla. And so why aren't these other companies manufacturing enough charging resources for their own customers? And the answer here is pretty simple. That's because charging infrastructure is pretty expensive to manage and actually to build as well, and the initial costs can be high with low returns that take a long time to see any type of ROI. If NIO does this strategic move would open up an avenue for future potential revenue streams. As the demand for electric vehicles continues to soar, other car manufacturers will continue to experience an increased need for charging infrastructure. And guess who's there to save the day? NIO. By owning a significant portion of the infrastructure in China, NIO is inevitably positioning themselves as a leader in the charging game. As more EVs hit the road, NIO can spark deals with these companies, offering its charging services to these third-party companies. It's a win-win situation for NIO, a steady revenue stream and a seamless charging experience for EV owners regardless of the brand. Now let's circle back to the incident. Some might argue that building more charging infrastructure in remote areas might alleviate this concern, might alleviate the scarcity concern. And they're not wrong. Expanding the charging infrastructure is a viable solution, but it's a lot easier said than done. Especially in remote areas, there's high initial investment costs, ongoing maintenance costs, and potential low utilization rates, which strike a calculated risk that many car manufacturers, especially those like Li Auto, who are predominantly built their business around hybrid cars, are hesitant to take. And that's where NIO stands out. Their determination to invest in charging infrastructure showcases their long-term vision and commitment to sustainable mobility. It's a strategic move that positions them as a pioneer in the charging market. So everyone, the electric vehicle market is evolving at an unprecedented rate, as we all know already. Each player is making moves that shape the future of transportation. NIO's dedication to an open charging network while also prioritizing their customers for customer satisfaction is a thought-provoking approach that challenges the status quo. As we conclude today's episode, let's reflect on the path that NIO has chosen, the delicate balance between competition and collaboration. There's a quest for customer satisfaction and the drive to be at the forefront of innovation. We have to remember that the road to progress may be filled with challenges, but the decisions that NIO makes along that road are what's going to define the journey. Until next time, keep questioning, keep exploring, and keep pushing the boundaries of what's possible. That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.